Hello there. Thanks for watching this video. My name's Miles Pitcher. I own Superior Lending. I've been in the mortgage business 22 plus years now. Today we're going to talk about how to get rid of mortgage insurance on your FHA loan. Now, if you have a conventional loan, I have a different video for you, and I'll have that down in the description of this video so you can go to that. But we're going to talk through this. I would really appreciate it if you could do me the favor of hitting that thumbs up, the like there. And we're going to go through this in a way as a kind of a decision tree. So first thing is you need to know when you closed on your FHA loan. Now, if you've refinanced since you put in place the original loan, that's the date we need. So your most recent mortgage, as long as it's an FHA loan, we need to know what that date is. If you were before June 3rd of 2013, and I know that's a long time ago, your loan is eligible for having the MI to drop once you have had it for 15 years. You've had 5 years on that loan, and you will have had a lot more by then. And you've made your payments on time, and now you have enough equity in the home that your loan is 78% or less of the value of the home. Okay. I imagine there's only a few people in that boat. So we're going to say no, and now we'll look at this as, did you put 10% down payment or more? If you did, you can have the mortgage insurance drop off your FHA loan after you've made 11 years of payments. And that, I'm not sure why they chose 11 years, but 11 years it is. And if you keep that mortgage that long, at 11 years, your mortgage insurance will come off. All right. So the majority of you probably are somewhere after June 3rd, 2013, and you did not put 10% down. In that case, your mortgage insurance is going to be part of your mortgage payment as long as you keep that FHA loan. We say it's kind of permanent, but there are some ways of getting rid of it. We're going to look at these and go through it. So I want you to remember, as we evaluate this, we always look at two pieces in evaluation. We take the interest rate plus the mortgage insurance, and we combine those together, and it helps us to be able to compare. We always want to be able to calculate our break even and be able to decide, if we do a refinance, how much are the closing costs, how much does it save me per month, and how long does it take for me to recoup those costs in doing this. I always offer to people that we can do a free checkup for you to see if it makes sense to do a refinance. I'm going to put a link in the comments and description below where you can give me just these simple pieces of info, and we can quickly tell you if it makes sense to do any type of a refinance for you. All right, let's go through the different options on refinancing. One is to do an FHA Streamline. The advantages to a FHA Streamline is the closing costs are really, really low. You don't have to do an appraisal again. You don't have to do income qualifying. So like if you're a self-employed borrower and you're having a down year in your business, this is great. Okay, it's a very easy loan. The rates are going to be better than conventional. And even if you've taken your home that you used to live in as a primary residence, FHA loan on it, and you've now converted it to a rental and moved out, you can still do a Streamline refinance on that FHA mortgage. Disadvantages are there will still be mortgage insurance on this. Okay. So in summary, you would do an FHA Streamline if you have a credit score that is under 700 to 720. Why is that? FHA is not very sensitive to lower credit scores. You would do a Streamline. You need to make sure you have the last 12 months of on-time mortgage payments. Another reason is you have less than 20% equity in the home at this point. If you have more than 20% equity, then we definitely hop over and see if conventional is a better option. And again, just like these dates were here before, your current FHA mortgage began between June 3rd, 2013 and March 20th of 2023. Why is that date significant of March 20th, 2023? That date is when FHA lowered down how much the monthly mortgage insurance ratio is. So if your mortgage is before March 20th of 2023, you are most likely paying a higher mortgage insurance rate than currently is available. So when you do a refinance, a streamline refinance, not only are you going to hopefully get a lower interest rate, but you're going to get a lower private or lower mortgage insurance rate. Another benefit for you. And I mentioned this before, if your income has dropped, a streamline refi is great because you don't have to qualify again for the mortgage based on income. Now, if we go to conventional, some of the advantages are that the mortgage insurance now becomes temporary. So let's say you only have 15% equity in your home. You may want to still do the conventional loan, pay a little mortgage insurance, and then once you get to 20% equity, you can have the mortgage insurance removed. It's not permanent like an FHA loan. And then the next cool thing is a recast. I'll put a link to a video on recasting, but this is one of the coolest things that's available on a conventional loan, is being able to recast your loan. In short, it's a way to, if rates are still the same or worse currently than what you have, and you make a nice principal reduction in your loan, $5,000 or more, you can request the lender to float down your monthly payment. Okay, you don't have to pay refinance costs. They just will, it's a reamortization of your loan, and it allows you to take advantage of, now you've paid down the principal, now you can get a lower monthly payment. Some of the disadvantages to conventional are closing costs are going to be higher. The rates are always higher on conventional loans than FHA. That's just how they always work. They're usually anywhere from 3/8 to 0.5% higher than FHA. In conventional, the pricing, the rates are going to be much more sensitive to your credit score. So the higher your credit score, the better rate you'll get. The lower your credit score is, as it goes lower and lower, that's where we may want to switch over and stay with FHA. You will have to do a new appraisal, and you will have to fully qualify for the mortgage. So you should do a refi to conventional if your credit score is over 700, you have 20% of equity in the home, or you are close to having 20% equity. Okay, those are the reasons to do that. Here's my contact info. I hope this helps you understand the ways of dealing with FHA loans and the mortgage insurance. Please feel free to reach out with any questions. We're here to help, or even give you an opinion on if a refinance makes sense. Thank you so much. Have a great day.